Well, the data, no real big surprises there. A little bit of disappointment in the GDP and the durable goods orders, but we knew the economy is slowing down. This really won't have a huge impact on our economic outlook. I have heard what people have been talking about. I think the U.S. economy is performing better than the stock market right now, and I agree with that argument that you don't go from 60 to 0 overnight, and we're decelerating. The data is softening, but we're not falling off a cliff. So, we're looking at fourth quarter GDP of around 2.5%, maybe a little bit lighter than that, and looking at around 2% for the first half of 2019. I do think the Fed should look at their monetary policy right now, and I do think quantitative tightening is a part of that. And I work for a bank, and we see this tightening our liquidity. And a lot of banks are seeing that, and so this is something I think the Fed should look at. Do we need to make an adjustment?
How concerned are you that Fed policy is actually going to seep into the economy in a meaningful way? Or what's happening in the markets, rather, seeps into the economy in a meaningful way?
Oh, I think it is already. I mean, I see the interest rate sensitive sectors of the economy slowing down, the housing market, auto sales. So we're definitely seeing a tighter monetary environment. It is slowing the economy down. But there's still a lot of momentum. The labor market's strong. Initial jobless claims at 49-year lows. And, we're still creating close to 200,000 jobs a month, and it's going to take a while for that to slow the train down. But I think I'd be cautious here, and I think the Fed did the right thing.
You think they did?
This week? Well, I don't expect...
Did the right thing in terms of raising the rate, or did the right thing in terms of how they explained what they're going to do next year? Because that's where I think the debate really lands.
I do think they have a communication issue. I mean, I think they're way too bullish in September when we were coming off of 2 quarters of 3% plus GDP growth. But they're trimming their growth expectations a bit. They scaled back their dot plot. So they're making some moves in the right direction here. I still have 2 rate hikes in the Fed forecast for next year. I don't know if it's going to be March and June, but I wouldn't be surprised if the Fed at least pulls the trigger one more time on the Fed funds rate. Yeah.
Scott, do you find it weird? And I will say at the outset I do, because when the Fed has it as a forecast, there's half a dozen guys, men and women on the street, who not only agree with the Fed's forecast, but they've already arrived at that forecast before the Fed did. It's part of a well-synchronized, what's called in the business reaction function, where everything kind of moves along together. And there's outliers out there. There's guys who say the Fed is wrong, the Fed is going to kill you. But there's a core of people, of forecasters out there who have the same idea as the Fed. It's very hard right now to find those folks. Some of them, by the way, feel like they've been hung out to dry by the Fed. They were sitting there with 4 rate hikes built in for 2019. And now they're kind of, these are well-paid, big-time economists that are now having to dial back. What went wrong here, and do you think the Fed made a mistake in terms of just not communicating to the market what the outlook was, or was it just wrong to begin with?
Oh, I agree with you. I'm not one of them, though, that had the 4 rate hikes in my forecast, so I'm happy about that. But I do think there was a big head fake. That big speech Jerome Powell made in, I think it was October, when he, said we're a long way from neutral and we're going to see further rate hikes next year. I think that really threw economists for a loop. I mean, I had 1 rate hike forecast, and after I heard that speech, I moved to 2 because I thought, hey, they're getting a little more hawkish here. They've dialed that back now, but I think that created a lot of optimism on the street that, hey, they're going to keep moving here on rates well into 2019.